and I'll be coordinating the call today. So to begin today's call, our CEO Peta will provide an overview of Lotus second quarter business performance, recent events, and focus and priority ongoing. Then our VP of Strategy and Finance, Beato, will follow up by reviewing the second quarter financial results in more detail. Then we'll have a Q&A session. So please raise your hand on Webex and we will unmute you. Then you can discuss your question with management. Okay, and now turn the call over to Peta. Peta, please.
Thank you very much, and good afternoon, everyone. I'm very happy to present Lotus second quarter. The company has achieved very strong results. Our revenue reached 4.7 billion NT dollars, and the EPS respectively 5.09 NT dollars, which are presenting a very robust quarter-on-quarter and year-on-year growth. The gross margin. Sorry, but I think we need to move one slide back. The next slide. Can you move the next slide, please? Why are we on the slide 5? Can you? Okay, so sorry for this technical. So our revenue in the second quarter reached 4.7 billion NT dollar, as I mentioned, representing 13% quarter-on-quarter and respectively 7% year-on-year growth. And the EPS 5.09, representing 28% quarter-on-quarter and respectively 5% year-on-year growth. Gross margin and operating margin achieved 61% and respectively 34%, which represents 6% increase for the gross margin compared to previous year and previous quarter, and 5% increase of the operating margin compared to previous quarter. The highlight of second quarter is obviously the Teva acquisition of Teva Pharma Thailand. So this is the first company acquisition of Lotus since 2014. So as you remember, we have signed an asset purchase agreement with Teva in June, and the transaction was successfully closed as of 1st of August. So we will be fully consolidating the revenue of Thai business in August onwards. Moving to the commercial platforms performance, Asian business achieved 5% year-on-year growth, mainly driven by Taiwan as well as Southeast Asia. In Taiwan, the growth was contributed mainly by performance of the key products such as Aclasta, Alvostel, which is a biosimilar of teriparatide, and Zepzelca. This is our new chemical entity in lung cancer, which we launched last year. We have also seen very strong performance from Cialis as well as Alinta. In Southeast Asia, the key driver for the growth was Vinorelbine in Vietnam. So this is effectively our biggest product for the time being in Southeast Asia, and we have seen very strong performance, and which obviously drive the growth in Southeast Asia. Good news is that we also launched Vinorelbine earlier in Philippines, and we are also seeing a very good uptake of the product in Philippines, which will should drive growth in year to go. So overall, we have launched 23 SKUs in the second quarter in Asia, mainly Southeast Asia, but also a couple of products in Korea and Taiwan. The export business achieved 8% year-on-year growth, which was driven by lenalidomide sales in the US. In the export business, US revenue grew 12%, with obviously lenalidomide contributing most of the growth, while buprenorphine naloxone revenue declined by 30%. We have seen recently also slight gains in prescription shares. So we anticipate the market will continue to stabilize, and we'll work to regain our lost market share, if not fully, to large extent. This is the ultimate objective. However, our efforts might not lead to a full recovery throughout by the end of this year. So as a result, the company may lose 1%, 1-2% revenue growth. So we'll be more certain about the outcome of buprenorphine naloxone full revenue trend in Q3. Nevertheless, buprenorphine naloxone is a relatively low margin product, and therefore its impact on the earnings is very low, insignificant, I would say. So we are anticipating, we are quite confident that Lotus will deliver a double-digit growth on the earnings compared to 2023. Next slide. Can you move the next slide, please? Number 6. So moving to the key business achievements, on the regulatory side as well as launches, the highlights for second quarter, we have filed the SEPA in Korea. This is a new chemical entity which we licensed last year. And we have rights for Korea as well as Southeast Asia. Korea is the largest market as an opportunity for this product, so it's fitting very well with our focus on cardiovascular therapeutic area in Korea. So this is definitely a milestone for us achieved. We also received enzalutamide couple approvals in several South American countries. Pomalidomide was approved in Singapore, which is paving the way for participating in upcoming tender. And we launched lenalidomide in Vietnam. In addition to that, we have completed the validation batches for nintedanib. Nintedanib softgel is going to be our biggest launch from internally developed and manufactured product in the next 5 years. And this was quite important to complete successfully the validation in the second quarter. From the R&D side, we have successfully completed one pivotal study for a complex product. It was a patient study. We are, based on that, filing the product on time to launch on patent expiry. We have initiated 4 new projects, 2 in oncology, 1 CNS, as well as 1 nephrology product. And we have currently in the R&D, 23 ongoing projects. On the business development side, we have signed 4 deals in licensing deals for generic products, mainly for Southeast Asia. And we also completed 1 co-development deal with a partner who has a strong position on particular API. So by securing this deal, we are securing global rights, including US. It's a potential first of our opportunity, and the brand only in the US is forecasted to reach more than $400 million. So this is a new direction that we are taking, moving to co-development deals, which are basically a way to enrich our pipeline of products. The concept here is that we are looking for partners who can add value by either providing API with particular IP position or formulation which is non-infringing, or sometimes technology that we don't have. So we are quite focused on pursuing such an opportunities, because this is again very strong tool to diversify and strengthen our pipeline and to add more complexity. And we are targeting actually to complete at least 4 products this year, and we have already hired a dedicated person from in the business development team who will be focused just on co-development agreements. Southeast Asia, again, Teva Thailand is the largest milestone for the company achieved in second quarter. So we are quite confident that this deal will triple the Lotus revenue in Thailand after, of course, consolidating our existing business with Teva. The key rationale for the deal is obviously adding critical mass to our business, also complementing our portfolio with new therapeutic areas for us in Thailand, like ophthalmology as well as respiratory. And also based on the acquisition, we are expanding our coverage in sales channels. So prior to the acquisition, we have been 100% focused on hospital channel. With Teva acquisition, we are adding also drugstore channel, which is quite important sales channel in Thailand. In addition to obviously the activities that I already described for the business development, the achieved milestones, we have progressed significantly on a number of new projects. So we have now three deals which are quite advanced. First one is basically a brand acquisition opportunity from multinational big pharma company for Vietnam, which is one of our core markets in Southeast Asia. The second opportunity is about acquiring a portfolio of branded generic products also for Vietnam. So these two obviously will strengthen significantly our business in Vietnam. And the third one, which is also quite advanced, is brand portfolio from big pharma for Southeast Asian markets in a therapeutic area where we have already strong presence and focus, and this deal will reinforce our position there. So these three deals are quite advanced, and basically we'll be giving you update as we progress on those three. But we are basically targeting to sign in the next few months these three deals. Next slide. This slide illustrates the progress with rolling out of our existing portfolio of products developed by Lotus. So we are very well on track with lenalidomide, gefitinib, vinorelbine. Basically, we have launched in majority of the target markets. With enzalutamide, we have also gained progress throughout the second quarter, receiving approvals in some South American countries like Guatemala and Paraguay. The next in line, which is a priority for us, is pomalidomide. So this is basically a product which we are targeting to launch in 2025. So we are actively rolling out the product. Nintedanib, I already mentioned, the milestone for us in Q2 was the validation, which is paving the way for the launch. This is a launch which will be in market launch in 2026 onwards. But obviously we are preparing for this launch as we speak. Midostaurin also is a very important product for us, which is a global program. We have similar to nintedanib, tentative approval by US FDA. Also, we are rolling out the product in other markets like Europe as well as Latin America. Next slide, please. So on this slide, we would like to illustrate the opportunity related with three major launches which are upcoming for Lotus. First one is enzalutamide softgel. This is a launch which is likely to occur in third quarter 2024, so it's imminent in UK. Market size is $145 million, and we are well positioned to launch the product on patent expiring. So we have engaged with a very strong partner who has been driving also invalidation of particular patents, which will allow the launch. In addition to that, obviously, we have already launched successfully the product in Latin America, and we are continuing to roll out to other markets, including EU. So we have already manufactured the product for the launch, and again, based on successful invalidation of the patent, which is highly likely, the launch will occur in third quarter of this year. Pomalidomide is launch for the EU in 2025. We already launched the product in Canada. Also, we are about to launch this year in Switzerland, which is a smaller launch. So here we have engaged with also multinational as well as some local strong partners. The opportunity in EU is for the brand, in terms of potential, is around $900 million. So it's quite significant product. And last but not least is nintedanib. Again, I would like to highlight that this is going to be our biggest launch in the next 5 years from internally developed products. So this is a highly complex product because it's a softgel oncology drug, which comes with challenges in development, manufacturing. So we successfully completed the development and also registration in some key countries like EU as well as US. So the overall market opportunity here is about $3.5 billion, and again, we are well positioned to launch on patent expiry in EU. Also, we have tentative approval in the US, and also quite good position to launch on first wave, and probably the first in many countries in Asia as well as Latin America. Similar to enzalutamide, pomalidomide, we have engaged here with very strong partners, 2 global companies which are among top 5, as well as number of local partners, and of course Lotus will launch the product in Asia through its own commercial entities. So this slide illustrates basically our focus on the pipeline, which is a combination of R&D as well as business development efforts. So currently we have in the R&D pipeline more than 20 products, majority of course in oncology, but we are also diversifying the portfolio, the pipeline in the R&D also in other therapeutic areas like primary care, lifestyle, as well as nephrology. Business development is, of course, focused mainly on complex products as well as innovation products as well as brand acquisitions. So currently in the business development pipeline, we have more than 30 products in different therapeutic areas like oncology, CNS, primary care, lifestyle, women healthcare, as well as nephrology. So on the right side, if you look at the type of products in the business development pipeline, we have 41% generics. New chemical entities are significant contributor within the overall mix, 30%. Then 505(b)(2) is 11, biosimilars 7, and tail end big pharma brands. So these are established brands which we typically acquire from multinationals like Cialis and Interdeal. They contribute 11%. So there's a lot of activities, efforts, and of course investment from the company, both on R&D and business development, and they continue to complement each other. And again, the objective is to deliver on continuous infusion of products in a hybrid model, which will result in a sustainable and profitable growth for the company going forward. So on this slide, you can see basically the number of launches that we are planning to execute based on what we have completed already as a development, as a business development deals. So we are targeting to launch 63 molecules, which is quite a lot within 2024-2029 time frame. 2024 is 6 products, 2025 9, 2026 is going to be the most active year in terms of launches, overall 22. And then also we have significant number in 2027 and 2028. 2029 number is only 3, but obviously this number will increase significantly based on what we are doing now in the R&D and also on the business development side. So majority of the products you can see here are contributed by business development, but also we have a lot in R&D. So we are kind of balancing out this in terms of investment, also in terms of complexity. R&D is focused more on generics 505(b)(2), whereas business development again is more focused on highly complex products, including new chemical entities as well as existing patent brands from big pharma. When it comes to R&D, the products that we are targeting to launch within next 5-year period, our addressable market size is $23 billion, which is significant. And in summary, in the R&D, currently we have 23 projects ongoing. So this is the R&D pipeline. Within that, we have 6 first-to-file opportunities, which is this is US products, but also some of these products, of course, they will be rolled out outside US. 15 products are mainly non-US programs, which are targeted to be launched on patent expiry. And we have also two 505(b)(2) programs ongoing. So I think it's quite a rich pipeline and also quite with significant potential, not only because of the market opportunity, but also because of the fact that we have a significant number of first to file here, 6. And going forward, our objective here is to increase the number of 505(b)(2) products, which will be driven a lot by what I already mentioned, co-development activities. This is a combination of business development and as well as R&D efforts, because once the contract is signed from the business development on co-development, R&D is taking over as a stakeholder with respective partner. Also, I'm sure that this will result in increase of the number of first to file opportunities, the co-development initiative. So we are quite excited about this development. So moving forward, I'll talk more about Southeast Asia, which is obvious focus for the company since a couple of years. First of all, why we are focused on Southeast Asia? This is the highest growth pharmaceutical cluster of markets in Asia. So it's targeted to reach average growth rate in the next 5 years above 6%. Some countries are markets double-digit growth. We are seeing basically a shift towards chronic disease treatments in these markets with the aging of the population also increase, which is of the population. This is driving obviously a demand, a significant demand. The market in Southeast Asia is pharmaceutical is quite fragmented. There are, for example, more than 500 local companies in Thailand, Vietnam, which creates opportunity for consolidation and M&A. In general, there's a lack of strong R&D as well as licensing capability. So typically companies in Southeast Asia are not very well connected, and they don't have also the leverage to in-license products, especially when it comes to innovative assets from US, European companies. And also there's unmet need when it comes to high quality innovative products. And we have seen also a lot of recent moves from multinational companies to exit these markets just to prioritize and focus on US. I mean, for example, companies like Sanofi, like Pfizer, BMS, they have done already this, and this also, I mean, creates opportunity obviously for us. Our advantage obviously is that we are a company which has been driving the business and the success to a large extent based on partnerships. So we have currently more than 100 global partnerships, both on licensing out, also licensing in. We have an excellent reputation among leading companies, including Novartis, Eli Lilly, Takeda, Bayer, and any other company. We have also very strong track record in executing external growth opportunities. So far, mainly focus on brand portfolio acquisitions, but since this quarter, obviously, company acquisition, this is Teva deal. And with our also hybrid pipeline approach, which is focused on oncology and chronic disease, which is matching exactly the shift of disease involvement in Southeast Asia, like CNS, CVS, obesity, women healthcare, nephrology. I think this is perfectly matching our strategy. And last but not least, we have, I mean, as the largest shareholder, PTT, a Fortune 500 enterprise from Thailand, which is one of the largest companies in Southeast Asia. So one of the rationales partnering with PTT from day one has been obviously developing Southeast Asian business. So our strategy is, if I illustrate this, is I mean, obviously first is acquiring infrastructure, buying existing sales and marketing platform with not only Salesforce but existing business and portfolio as well as pipeline. The first deal is Teva Thailand, which was already completed, and we have other opportunities under review for markets like Vietnam, Philippines, Malaysia, Indonesia. Second step is, I mean, we are integrating Lotus' own portfolio and as well as the third-party products that we have through license here or acquisitions. To create critical mass here with the existing business and with the acquisition. So I would like again to remind that we have 3 advanced projects which will significantly change the outlook of our Southeast Asian business. So brand acquisition opportunity in Vietnam, which is one of the most popular brands in Vietnam. Second is branded generic portfolio in Vietnam, and also brand portfolio of products in Southeast Asia. So should we are successful with these 3 deals, basically we will multiply our existing business 5 times in 2-3 years in Southeast Asia, which will create a significant scale. And obviously, next step will be, after completing the previous 2 steps, is to finalize a transformational deal. So we are actually looking for M&A opportunities. So there are not many opportunities so far open, but based on what I described earlier, high number of companies with facing challenges, we think that consolidation is going to occur. So we are already looking for a couple of opportunities, and again we are quite confident that new opportunities will come in. And final objective here is to create a significant platform in Southeast Asia with very strong commercial team, existing portfolio, which with significant scale, again at least 5 times bigger than what we have now, as well as potentially manufacturing platform dedicated to Southeast Asia, and also R&D focus for Southeast Asia. So here basically you can see what I already mentioned. I mean, we are on the right path to deliver on that. So we are quite confident that based on active opportunities that we have, we can grow the revenue 5 times in the next 3 to 5 years. Partly it will come through organic growth, but significant part of this increase of the revenue will obviously come through external, which is again driven by business development and M&A. On the near terms business highlights, so we have again we have closed the Teva transaction on 1st of August, so we are already consolidating as of August the revenue, so it will have a full impact August onwards. We have a number of opportunities which we think we can close in the next 3 months. 3 to 6 months, which are brand acquisition, as well as Southeast Asia branded platform, and also product acquisition. In terms of product launches in 2024, the biggest launch for us year to go will be Azotamide UK launch, which I already explained. And we are also preparing for pomalidomide as well as nintedanib launches in 2025 and 2026. We will see. I'm confident based on the year-to-date performance and also our forecast that the key products will continue to deliver strong growth, like lenalidomide in the US, mainly driven Fusimia in Korea, which year-to-date is already delivered 20% growth. Alinta, Cialis, and other key brands in Southeast Asia. So we are continually looking to expand our product portfolio through in licensing as well as internal development of complex generics, 505(b)(2) biosimilars, and new chemical entities. So this is going to be activity throughout the year and also in the outer years. So stay tuned for news on that one. So with this, I will hand over to Bjartur to continue with the financial.
Okay, right. Thank you very much, Petar. So we will start with the overall financial performance of the quarter. So the consolidated revenue grew approximately 7% year on year and 13% quarter to approximately 4.7 billion. Our Asian businesses grew about 5% to 2.3 billion, and export outside of Asia grew 8% to 4 billion. In Asia, the growth was primarily driven by Taiwan and the CIS markets, which grew 7% and 48% respectively. So the export revenue growth was largely driven by higher revenue of lenalidomide, which grew 48% year on year in the US, and offset by a lower revenue of naloxone, which contracted about 30% year on year. This is similar to where we were lost of market share in that product. So, however, the overall US revenue expanded 12% this quarter as a result. The overall gross margin of the company increased 10% year on year, reaching 2.9 billion Taiwanese dollars, with a gross margin of 61%. Then the 2 percentage points increase of the gross margin was contributed mainly by the more favorable product mix in terms of the revenue. That is to say, more revenue from higher margin products such as lenalidomide, and less from the lower margin products such as the generic naloxone. So the operation expenses of the quarter was approximately 200 million higher than the prior quarter. That is mainly driven by the one-off charge that we took on for the NRX co-development program. As the investors are probably aware of by now, Lotus and its partner decided to walk away from the deal, and approximately 80 million Taiwanese dollars cost incurred by the company to validate the clinical results of NRX and to determine the product's commercial potentials. All this cost has now become sunk. However, Lotus is no longer obligated to contribute any more money to this program, milestone expense or otherwise. Sales marketing SG&A expenses were about 90 million higher this quarter versus the prior quarter, mainly due to the timing of sales marketing promotion expenditures. As normally Q1 is shorter in terms of the number of days, and the spending on sales marketing is normally the lowest in in a year. So in summary, the business contributed this quarter about 1.6 billion to operating profit, about 30% higher than the prior quarter. And the operating margin also improved 4 percentage points quarter on quarter. So on the non-operating side, finance costs reduced from 129 million in Q1 to 116 million this quarter, which was driven by a repayment of approximately $1 billion of company debt in this quarter. Then other gains amounted to 121.7 million Taiwanese dollars, contributed largely by the favorable US dollars, Taiwanese dollars effects exchange rate. So in summary, the company delivered a very strong quarter of approximately 5% increase in EPS year on year and about 28% quarter on quarter. Next slide. Thank you. And now turning to the details on business segments. In Asia, the revenue growth this quarter was contributed by Taiwan, about 7% growth, and then the rest of Asia about 48% growth year on year. While the Korean business was largely in line with the same period prior year. In Taiwan, revenue of major brands grew substantially, such as osteoporosis brands Clasta and Vista grew 17% and 5% respectively. And pharmacy channel products such as Cialis and Benzol, those the two large brands, grow 4% and 18% year on year. And I think also worth to mention, particularly the innovative lung cancer treatment on Zepzelca, the first new chemical entity that we launched in Taiwan, grew 266% year on year. Now, additionally, Alinta endured a lot better the generic competition versus our own expectation previously. So only about 4% lower revenue versus the same period last year. And this means the volume expansion in this first-line treatment of the non-small cell lung cancer contributed a lot more to counter the price erosion in Taiwan. So for the rest of Asia, our Thai business grew about 10% versus the prior year. That is, of course, without the results of Teva, which started 1st of August. And Vietnam revenue grew 183%. As Peter mentioned, this is mainly due to the expansion of vinorelbine in hospital channels in Vietnam. And the other CR markets grew combined 445% versus the prior year. So the offsetting factor was actually the mainland China revenue, which became less due to the timing of the Chinese orders. So in the export business, US grew about 12% year on year, as I mentioned earlier, with lenalidomide contributing most of the growth. While buprenorphine revenue declined about 30%, we did saw some slight gain in the prescription share. So we will be working to recover the lost market share, but we will be more certain about the result of our efforts in Q3. And as Peter mentioned, buprenorphine is known as a relatively low margin product, so the impact on the bottom line net earning is a lot less significant. We mentioned as the profit margin of the product of buprenorphine becomes relatively thin, so is the incentive for the other players to enter and to compete in price. The incentive become much less. So all in all, the US ended up with a very good quarter. So outside the US, revenue was about 47 million dollars lower this quarter than the prior year. We don't necessarily see this as a concern, as some of the larger launches that I mentioned are geared towards the second half of the year. Okay, next slide. Okay, so moving on to the revenue structure, which was largely unchanged, roughly about 50% of a contribution from each Asia and export markets. Likewise, in the therapeutic focus, you can see on the left-hand side, 50% of the oncology portfolio contributed to the revenue, total revenue of the company, and the other half is contributed by the other four key therapeutic areas of the company. Okay, finally, I will wrap up with a look at the cash and the capital structure. So this quarter, the company netted operating cash inflow of approximately 1.4 billion Taiwanese dollars before the payment of tax and interest, which was about 58% higher than the same period last year. And after the payment of tax and interest, net cash from operations was about 934 million Taiwanese dollars. And we deployed some of this free cash flow to pay down a portion of the outstanding debt in the amount of approximately 1 billion Taiwanese dollars. Therefore, the gross interest-bearing debt of the company decreased from approximately 11.3 billion at the end of Q1 to about 10.4 at the end of Q2. So as a result, of course, the financing cost also came down from 147 million in Q1 to 121 in Q2. So as of today, the company had a cash on hand position of approximately 2.86 billion, similar to that of the 3.1 billion at the end of Q1. So the net leverage position of the company was roughly the same as the prior year, about 1.2 times LTM EBITDA. So this is lower comparing with the previous quarter of 1.35. So with that, my last remark is the company remains very well funded and mostly very low leveraged. We're in a good position to tackle some of the expansionary investments in the coming months, as Peter mentioned earlier. Okay, with that, thank you very much. I just conclude my report.
Okay, thank you, everyone. So now you can raise your hand on WebEx, and we can unmute you. Then you can discuss your questions with the management. Okay, I think Alex from Point 72 has some question, but we cannot hear you.
Yeah, sure. Thanks, YY. So thank you, management, for taking my question. I have a follow-up on the growth outlook. Considering the Southeast Asia opportunities we envision, how should we think about the growth in 2025 and beyond? And when should we expect larger M&A highlighted in the strategy slide? Thank you.
Okay. Yeah, we will continue basically the double-digit growth for sure. Also, towards 25 and beyond, this is the objective. And on the second question, the large M&A, I mean, this is work in progress, as I mentioned. Currently, there are not really a lot of opportunities for transformational deal, right? But I mean, we have identified proactively particular one, so we are working on it, but it's a kind of early stage. And meanwhile, we are also exploring other options and working closely with investment banks and also with our network to find more opportunities. So it might be basically next year, could be the year after, right? So I mean, this is something, of course, we cannot commit.
Right. So just to add, Alex, just to give you a kind of rough size of the deals that we're looking at today, apart from what the transformational deal that Peter was talking about. So, our business in Southeast Asia today is about $30 million, right? And the deals that we're looking at now, the three more deals, including then Teva that we're starting to consolidate now. This will add twice that more to our Southeast Asian revenue. So to bring immediately from 30 million to almost over $100 million potentially the next year. Of course, that is to assume we actually are successful to close all these three deals. So those are the things that we can actually see already, which is already quite substantial. And just as kind of a benchmark, today our Korean business is about 60 billion Taiwanese dollars. So once we have all those acquisitions that we are working on now closed, we will have a Southeast Asian cluster similar in size as our Korean business today, which is actually quite significant.
Got it. Yeah, thanks a lot for the clarification. So maybe like another follow-up here would be just curious, like how should we think about the competitive edge for us compared to perhaps like the Chinese or Indian like the competitors?
On which direction? On the getting the deals or competing with them on what exactly? On completing this business development M&A opportunities? Is that your question, or?
I think Alex, you're on mute.
Yeah, sorry, I think like there's some system error. Yeah, sure. So yeah, actually like in terms of the M&A competitiveness, and also like maybe like if like we can elaborate a bit more on our Southeast Asia strategy, like compared to the other peers, like that would be really great. Thank you.
I mean, I think basically, if you look at the Indian companies, they're mainly focused on US, basically Indian markets, and there are some companies which are active in Philippines, but none of them is obviously active in Korea, Taiwan, and Southeast Asia. I think Thailand is not really a priority. Vietnam, some companies are present, but they are more through partners. So we don't see a lot of competition from Indian companies on assets there, right? Especially if it is multiple country assets, right? I think Indian companies, they will continue to focus mainly on China, US, and some of them, of course, in Europe. So in my opinion, there will be Southeast Asia will be the least priority for them. This is how I see it. Chinese companies, I mean, they're of course more desperate to go outside China because the market is difficult now. I think Chinese companies so far, what we see is they're very strong competitors when it comes to in-license innovative assets, right? Because they are buying Chinese rights, paying this is significant consideration, many cases overpaying, and in addition to that, of course, they sometimes get additional markets, Southeast Asia and Taiwan. But when it comes to product acquisitions from big pharma, I think Chinese company for the time, what we see, they are more focused on China, acquiring assets in China. Also, M&A, I mean, we haven't seen, I mean, them very focused on acquiring also assets, right? But of course, there is a competition. I mean, for sure, there is a competition, and I think our advantage here is what I mentioned already, we have, when it comes to in-licensing products or acquiring products, I mean, we have a very strong network and also very strong track record in completing the deals and also integrating the assets smoothly. Because for the big pharma companies, this is very important, right? It's not only to divest the product and to receive the licensing acquisition amount, but also they're equally it's important that the acquirer of the asset ensure that the product continues to go smoothly as a supply chain, also as compliance and of course sales and marketing. And we have done this in a numerous occasions in an excellent manner. So I think this is a plus. On the M&A side, I think basically like with Teva, if you take as an example, Teva, actually this is proactive approach here, right? So we have been reaching out to Teva for I think the last 3-4 years asking for this asset, right? And the answer was no. Last year they said, yeah, we are open to discuss, and basically they did it. This was exclusive process, and I mean the reason for that was obviously the relationship that we have had with Teva. I mean, we are partnering with Teva on a number of products, licensing out our products, and there's a mutual trust. I mean, the company like Teva, they don't want to obviously entertain multiple discussions here, so they wanted to do something faster with someone who knows the game, right? Who can execute this in the right way. And I think this is our leverage. But of course, I mean, this. I'm not saying that this will be. In general, there will be no competition. There's a competition, and we see more competition actually from private equities, right? Not that much from strategic, it's more from private equities. And I think, in my opinion, our key advantage is that we have already built a commercial platform. We have already infuse and register a significant part of and key part of our pipeline, and we have a lot of deals which are coming in, not only generics but also complex products. And also I think we know how to drive integration. So, but of course there's a risk that not all the deals will go through for sure, because at the end it comes down to you know, evaluation. Yeah, also.
Yeah, that's really clear. Thank you very much.
Okay, if there's no further question, then we'll end the call here today. Thank you, everyone.
Thank you for your participation.
There's a
more?
sorry, yeah,
Someone?
there's one.
Okay. Okay, please.
Please.
There's one more person.
Reaching.
Yeah.
Hi.
We don't hear you very well. We cannot hear you.
We cannot hear you.
Yeah.
Yeah. Maybe you can type in your questions in the chat box.
If you can introduce yourself and type the questions, maybe we can read it for you.
Yeah.
Sorry, can you hear me now?
Oh,
yeah,
yeah.
Yes, we can now. Yeah.
Oh, sorry. Maybe I mute myself. Hi, this is Vicky from Macquarie. Thank you for the presentation. And it looks like company is geared for high growth as you expand aggressively in Southeast Asia. So what would you expect the revenue mix to be between Asia and the US in the future? And is there a potential for margin compression with more business in Southeast Asia in the future?
Yeah, that's a good question. Do you want me to take it, Peta, or?
Yeah, now I'll take first part. I think basically In general, I think, of course, depends on the transformational deal that we are talking about, right? But overall, we think this will be probably 60-40, as similar to what is it now in favor of Asia as a mix, right? And what Beato mentioned is, I mean, if you look currently, our Asian revenue is highly concentrated prior to Teva deal on two markets, Korea and Taiwan. And with Teva, Thailand, and also the other deals which are advancing and hopefully new deals which are coming through, we will clearly diversify the Asian business and of course add significant critical mass to it. So we'll have basically Southeast Asia becoming 30-40% of the overall Asian business, which will put us in a different position here and become one of the leading companies in Asia, which is our objective. And we like Asian business because of the fact that it's very stable, very sustainable, right? And of course, the growth is not as significant as in the US, right? But I think having a combination between sustainability in Asia and growth opportunities in the US and other markets, which we are operating through B2B partners, will continue to drive double-digit profitable growth. I didn't hear well the question about the gross margin. You said something about the gross margin.
Well, whether buying more assets in Southeast Asia will actually result in a lower gross margin on the average for the company. That was your question.
No, not really. I don't think so. It will actually improve.
Yeah.
It will improve the gross margin because typically we are acquiring, targeting products with margins which are higher than the current growth margin of the company, right? And of course, when you acquire, if it is a big pharma brand, initially we have to stick to the supply chain of existing supply chain. So the margin might be in line with what we have now, but then after we transfer the product to our facilities or to a CMO, the margin increase significantly. Like Cialis, I mean, we started with a margin which was close to in the range of what we have now, and after switching to our in-house supply chain with generic API, which was done in July. I mean, we went to basically we are now about 90% margin. So this is part of the integration of the asset, right? We are integrating not only sales and marketing, but also we are integrating the supply chain, and part of this is capturing saving opportunities.
Thanks. This is very clear.
No problem.
Thank you.
Thank you.
So,
Is there other? We'll take one last question before the call. Okay, if there's no further question, we'll end our second quarter earnings call today. Okay, thank you, everyone.
thank you.
Thank you, Beta.